Hello and welcome to Asian Insider. I'm Ravi Velloor, and my guest today is Ambassador Jawed Ashraf, Chairman of India's Trade Promotion Organization. And we're going to discuss the flurry of trade deals that India has been announcing in recent weeks. Ambassador Ashraf is a former envoy to Singapore and France, and he has served as a foreign policy advisor to Prime Minister Narendra Modi. Sitting at the intersection of policy and execution, he is perfectly positioned to discuss the two big trade deals that have come out of India. First, with the European Union, which was dubbed the mother of all trade deals, and now with the United States. So, welcome to Asian Insider, Ambassador Jawed Ashraf. We have a lot to unpack in this conversation.
Well, thank you, Ravi. Always a pleasure to speak to you and good to see you.
Javed, you were High Commissioner to Singapore when India pulled out of the Regional Comprehensive Economic Partnership. And we in ASEAN were all disappointed at that moment. But suddenly, you have these two major trade deals coming out of India. What's going on?
Well, Ravi, you've asked a question that requires a fairly detailed response. Yes, we did pull out of RCEP negotiations almost at the last stage. When I say at the last stage, it also means that we were very seriously looking at it. We were involved in negotiations for more than 5 years. But I think it did not meet our expectations in terms of a few very specific asks that we had in order to safeguard our industries from what we then thought would have been, somewhat predatory practices by one or of the members, and utilizing our, of course, open trading relations with the ASEAN region. So, there were concerns on that. But there is also something else that I should point out, that we have not been much in favor of plurilateral agreements or joining regional groupings, other than, if you notice, SAFTA, which is, of course, because we are the largest player there. All our FTAs, whether they were those that we signed in the first decade of this century, that is 2000s, or the ones that we are entering now, are in a sense bilateral. Bilateral either with one country or a group of countries. So we have had with ASEAN in the past, we've now had it with European Union, with EFTA, but we haven't become part of, for example, CPTPP or RCEP or any similar grouping, as it were. Now we can argue about or discuss or debate, not argue, discuss or debate the reasons we do that. But we believe that this gives us a much higher level of control and comfort, that in terms of negotiations as well as in managing these. There are something else that has happened, which is in a way brought about a shift in the way we look at FTAs. One is that, we had a series of FTAs in the 2000s with Singapore, ASEAN, Japan, Korea, Malaysia, Thailand. This is largely to the east. We didn't have a good experience in terms of outcomes. And therefore, there was a period of trade pessimism. And then came this COVID crisis, 2020. We saw disruptions. We also saw the concentration risks, the need for diversification. But on top of that, and starting with sometime around 2008, after the first global financial crisis, but continuing to evolve since then through successive US presidencies, and in a sense reaching a high point under the first term of President Trump, but also continuing in a more exaggerated or a more sharper form now, we see a dismantling of a multilateral rule-based trading system. Now, none of us likes it. It is particularly important for middle and small countries, but this is happening.
Mhm.
And the irony is that the country that led
Mm.
the creation of the international institutions of governance, of politics, of security, of trade, finance, that is the country that is, in a sense, no longer finds this useful, attractive, or serving its interests. and therefore it is in a sense retreating from it. So the so while we are also seeing the in a sense a shift from multilateralism to regionalism, to bilateralism to plurilateralism in trade, we're also seeing that there is now a greater alignment of trade with geopolitics. So, geopolitical trust has become an important determinant of trade flows, investment flows, technology flows. Then we see the concentration risks that exist from excessive, concentration of supply chains and of production in one part of the world. And because you're also seeing an increase in trade restrictions, and as you might know, Ravi, that the number of trade restrictions globally, according to the IMF, increased from about 1,000 measures in 2019 to 3,000 now. All of this is fundamentally altering the trading environment. So we in India, starting from 2021, have been now looking at trade agreements, not simply as an issue of eliminating or reducing tariffs or removing trade barriers, but also as a means of supply chain resilience, of creating a environment in which of trust and confidence, predictability and stability, in which investments can also flow. And incidentally, good quality FTAs are increasingly correlated with global value chains. Global value chains account for 60 or 70% of global trade today. And so, if you see all of this, then I think we take a very important strategic decision. And that strategic decision was that we need to look at FTAs, and FTAs based on our strengths and the complementarity. And that was very important dimension, the complementarity of the countries we were dealing with. So you're starting, we have had eight actually. If you, at the moment, I don't say with the US you have an FTA or an agreement, you have a deal,
Yeah.
you have an understanding, a framework that has to be then translated into some sort of an agreement. But we've had with we've had with Australia and New Zealand now, Oman, UAE, and Mauritius, and with Europe.
European
We've
Free
got
Trade Association. Yes.
UK,
Yes.
EFTA, European Free Trade Association,
Y-
and now with that mega deal with the European Union.
Yes.
And we're also negotiating several others. And we've just announced the terms of reference with Gulf Cooperation Council. And there's Chile, there is, Eurasian Economic Union, there is Portugal. I mean, there is a whole lot of other agreements that are in the works. And what it has done is that it has also, in a sense, created a sense of a framework of our external economic engagement that reflects confidence, openness, but also a strategic decision around the geopolitics, but also on locking in predictability and stability
Yeah.
in with our major partners.
Can I just stop you there for a second?
Mm.
The Prime Minister, Mr. Modi, has projected it as a moment of self confidence for India.
Yeah.
Now, what's prompting this self confidence? Because if you see from the outside, the rupee has been quite weak all of
Mm.
2025. FDI inflows are not that strong,
Mm.
and growth is strong, but has moderated in the
Mm.
last
Yeah.
quarter of 2025. So, where is this self confidence
Mm.
coming for India?
Well, first, if you see the overall macroeconomic picture and you see it in the context of the world today, I mean, a lot of economic metrics that used to have some sort of an underlying correlation as indicators no longer seem to hold. And that has many, underlying causes for it, including the fundamental reassessment of the future of dollar, of the rise in gold prices, when you look at FDI and FIIs, I mean, foreign portfolio investments often don't have anything to do at a particular point of time with the underlying strengths of an economy. They may have something to do with, at a point of time, in sort of harvesting the gains, moving money because of other factors into other markets, etc. But I think what I see is broadly in my own interactions in Europe and with a large cross section of people, a great deal of confidence in the Indian economy going into the future.
Mhm.
And these may be short term turbulence. Everyone is in a sense also hedging, and I think. What has happened with EU and what is happening with the United States is going to restore and strengthen a great deal of investor confidence
Mhm.
in the Indian economy, because it injects a high level of predictability and stability in two very important relationships that India has, at least.
Yes.
Um, which account for nearly 40% of our exports also, but also the signaling that go with it of India that is confident, that is open, that is engaged, and that in the case of the United States, the kind of uncertainty there was haven't been completely eliminated, but I would say that they have been largely resolved, and that there is a political intent in the United States and here to move forward and restore the sense of normalcy and stability in the relationship. All that will make a difference. But the self confidence in India, I think, comes from the fact that we're seeing some important changes. One, of course, is that the process of reforms have gathered momentum.
Thank you for that. But I get that at a very big level. The supply chains you spoke about,
Mm,
shifting production patterns, and all that.
mm,
Uh, but these trade deals tend to be abstract to most people on the ground. They don't quite
mm.
understand it. What do these mean for, when you boil it down to small business owners? What does it mean for the ordinary leather uh, worker in India, or the textile guy in Tirupur in southern India, or the jewelry people in Gujarat, in western India? What does it mean for these people?
Very good question, Ravi, because I think at the end of the day, it must address precisely the interests of the smaller stakeholders in this business. Let me start with the European Union, which was an agreement in which we have secured immediate elimination of duty on 70% of the tariff lines, accounting for 91% of the value of our exports. And that includes all the labor intensive sectors, small scale industries like garments, gems and jewelry, textiles, leather, footwear. These are the sectors which are essentially dominated by small scale sector and also are labor intensive. So these sectors, for example, as I said, have now going to have immediate duty elimination on entry into force. We've also addressed the non-tariff barriers in these in this agreement. Now, when you then look at what does the exporter need to do, one, of course, is that you're immediately at a competitive advantage vis-a-vis some of the other countries who may have a similar destination and similar kind of capital labor uh, structure. So this then has to be translated into outcomes, and that means that we have to help our small exporters. We have to support them to be able to exploit the opportunities. a an FTA is a door opener. It opens the door. It's an enabler. The gains are not automatic. It needs to be, in a sense, harvested and realized. There will be some immediate gains simply because of tariffs, but I think to fully realize the potential, the industry and the government will have to work in a very concerted manner, and also continue with domestic policy reforms, financial reforms, infrastructure expansion, in a way that the domestic environment is supportive of the harnessing of the opportunities that FTAs open.
Right,
External agreements are most effective when domestic policy environment are conducive for
right,
it,
right.
and I think part of our job is to make that happen.
Period. And the FTA with the EU seems solid. And as you detailed it, it opens access for 99% of India's exports. Now, some years ago, I was in your house in Paris, and I remember you telling me that France is the new Russia for India. And of course, you were talking about it in defense equipment terms, of course. But can you place this FTA with Europe in strategic terms?
Well, first, I didn't say that. I didn't say that Russia is the France is the new Russia. I mean, I think the Russia relationship stands entirely on its own merit
Yeah,
and will continue to be a very important relationship for India.
right.
I meant that a lot of people think of France in a way making up for some of the challenges that we now face in our relations with Russia, particularly with regard to defense collaboration. And that, in a sense, you're seeing is continuing to go from strength to strength. But look, both Europe and India are facing a similar kind of a geopolitical challenges. I mean, we have three major powers that are believe that they can bend the world to their will. We face a erosion of international law-based multilateral system, and we are facing similar kinds of headwinds in a sense of trade. So, if you take all of this geopolitical challenges that we face and the disruptions that both Europe and India are experiencing, then there is a great need for diversification for both Europe and India, and European Union and India in their external strategy. And this diversification has many dimensions. There is a strong growing political partnership, both with member states and at the European Union level. There is now a clear commitment for a defense and security partnership, not just at the member level, but at the European Union. And we are also looking at what we can do together in the third countries, in multilateral forums. There is an agreement on mobility, on innovation,
Right.
on so there's a comprehensive agenda.
Yes.
But the centerpiece of this is the EU-India FTA.
Mm.
Now, very few people realize how vibrant Europe-India trade and investment relationship is. Let me tell you some startling figures. So if you look at the Indo-Pacific region, and I'm quoting Eurostat data, over the last decade, EU's trade relationship with India and EU's stock of FDI in India has grown at the fastest rate among all Indo-Pacific countries. And then you see two things. So you see a correlation between investment flows and trade. And in particular, I wanted to point out that the two countries that actually stand out in terms of growth in trade and investment with European Union are India and Taiwan. And so that gives you a little bit of a picture of how supply chain shifts are also taking place.
Yes.
So EU FDI into India's the stock rose from 80 billion in 2019 to 140 billion now in just 5 years.
Cumulative.
Yes, I mean, so the stock, so that means stock has jumped from 80 to 140, and you see this just in 5 years.
Right.
Trade has doubled over the past decade.
Right.
Imports from India in particular into European Union have grown at 120%.
Right.
So this is an FDI stock from France rose an astonishing 373%. So it just tells you that this is a very already the base is very strong, and this FTA is going to be a centerpiece of a deeper strategic partnership. But it isn't just that. We both need each other to for innovation and competitiveness, because we offer scale, they offer technology, we have innovation, human capital, etc. And today, when we look at the building blocks of the future, particularly centered around semiconductors, AI, quantum computing, etc., this is an opportunity for India and Europe to work together
Right.
for strategic autonomy, sovereignty, and building their own self-sufficiency and shaping the future of the AI age.
Yeah, I get that. Now, but the FTA with the European Union came after about 20 years of on-off
Yes.
negotiations. Now, was there a strategic message to some other people, particularly to the United States, in the way the deal was clinched so quickly in the last moments and broadcast to the world?
Oh, well, first I'd say this that we've had two phases of negotiations. The first phase sort of petered out into in by 2013. It was low on ambition. There were rigid positions. I think from 2021, we've actually both sides have raised the ambition of this agreement, but also imparted a sense of urgency. And I've been seeing this when I was in France, the intensity of negotiations, the growing flexibility. But I would agree that last year raised the sense of urgency to a new level. What we experienced and what Europe experienced in terms of trade disruptions, the kind of turmoil and turbulence that we saw, we saw a definitely increased level of urgency and higher level of flexibility, higher level of ambition in both Brussels and Delhi. And in Brussels, I say not just at the European Commission level,
Hmm,
but also from key member countries that
hmm,
we need to get this done
hmm,
because Europe needs new patterns of alignment.
hmm.
I mean, you look at Europe, its relationship with Russia is now at the moment frozen.
Right.
It faces great economic pressure from China in a increasingly distrustful geopolitical context. Its transatlantic relationship has almost been untethered from its anchors of economics, values, and politics and security. So that relationship, is going to be very difficult to mend. So Europe needs to look at new partners in the same way we have seen. We whatever we do with China, there will be a sense of competition, sense of mistrust, etc. With Russia, it has its own sets of constraints, not because of India and Russia, but because of Russia's geopolitical context for Russia. With the United States, we've had some framework deal at the moment, but it is still a relationship, a trade relationship, an economic partnership that will be you know, with shadow of uncertainty going forward. So it became particularly important for us to impart resilience and mitigate risks. And in doing so, we have done well to sort of really lock this in with the European Union.
Right. If you don't mind my saying so, India seems to have negotiated as an equal with the European Union.
Mm.
But with the US, it does look as though President Trump had the upper hand in the negotiations. I don't want to say he was pointing a gun at your head, but there's been a lot of criticism even within India about the interim agreement that has been signed with the United
Mm.
States. Um, how does that play out for India, particularly in the field of agriculture?
So it's actually still a work in process. So let me say that there are three different dimensions to the so-called deal because it's still a framework. This has to be then translated. It has to be implemented into an interim agreement. And after the interim agreement is finalized, then we have to continue with negotiations on a bilateral trade agreement. Now, the context becomes much easier because of the fact that we have so many FTAs now, including with European Union, with UK, and with EFTA. Now, these are all developed economies with a similar sort of profile as the United States. And the kind of FTAs we have entered into, for example, with UK and EU, are really ambitious, and they would be in the nature of what one might call extra WTO FTAs, which means they go beyond simply tariff and regulatory and non-tariff issues. Uh, so with the US, that then provides a framework to deal with. Now, the first part of it is the on tariffs, which is, and I think what we have seen is from in the case of agriculture, let me say that there are a number of agriculture products on which we have been able to get zero. duty access into the United States. At the same time, all our sensitive sectors have been excluded from this framework agreement. That's been very clearly stated in our press releases and the documents that we have released. We have looked at very carefully on what are the agriculture products that we will be importing from the United States. So a lot of has been said about animal feed. And animal feed, there is already a gap in India. We already import a fair amount of animal feed. And really, the question is, do you diversify or divert agricultural land or land that is used for producing food grains into some things that might be required for animal feed? Now, for DDRS, the quota that has been given to the United States is 1% of our total annual demand, according to the Department of Commerce website. Similarly, if you look at stuff like apples, now we import about 500,000 tons of apples from all kinds of countries. And so,
500,000
there's
tons?
tons. I'm quite amazed to
Yeah.
to see that figure. So some of these things like nuts and so on and so forth have been permitted. Uh, that means that these are things that we don't see as fundamentally affecting the core interests of Indian farmers.
Yes. One of the things that surprised me in the White House statements that came out on interim deal with India
Mm.
is that, surprisingly, for a trade deal, there are several references in the documents to strengthening defense cooperation.
Mm.
What is the significance of those lines? I mean, it's rather odd that in a trade agreement that there should be so much stress on the defense part of it.
See, I'll only go by what is there in the joint statement that was issued. Then you have White House fact sheets, you've got an executive order. That's the US. A joint statement reflects our commitments, right? And so, it covers basically, 8 areas. It talks about tariffs, preferential market access, rules of origin, non-tariff barriers, standards and conformity assessment procedures, which means that we align the standards and testing procedures. We talk about, yes, very important, strong economic security alignment to enhance supply chain resilience and innovation through complementary actions to address non-market policies of third parties, review investments going in and out, and export controls. And then the seventh thing was intent to purchase $500 billion of goods from the United States over 5 years. And eighth was to address discriminatory or burdensome practices and other barriers to digital trade. These were the 8 things that are mentioned in the everything else. I mean, we have of course seen that the executive order issued unilaterally and removes also the 25% tariff on account of Russian oil. So if you focus on this, then of course, when we talk about purchase of $500 billion, then it's an intent. And I think what the government is looking at, I mean, it may or may not happen. It's an expression of intention, because as we try to develop our digital sector, particularly centered around data economy, data or around AI, and as we try to build our own sovereign capabilities in these areas, there will be expectation that we may need to import large quantities of data center related equipment, GPUs, etc. There will, of course, be import of energy, and there would be, as we try to diversify our sources. And so, U.S. has become an important defense partner in terms of platforms and equipment, in weapons, and so on and so forth. But it by no means this agreement obliges us or binds us to any kind of defense acquisitions from the United States into the future, without us taking into account our own needs, requirements, policies, strategy, etc.
Right. I want to end this podcast with a question to you. Uh, Given this new confidence that India is displaying on trade, essentially, if I may use a cricketing expression, playing off the front foot, is there any chance that you might revisit the RCEP in the new context that you're in? And especially with you driving the ITPO since the last
See,
couple of months.
Ravi, I'm not in the policy domain. I'm now in more in a promotional and execution domain. So it's really for the government to decide whether it wants which way it wants to go. But I would like to say I'd like to make a few observations in this. One is that we do need to revisit our agreements, FTAs that we've signed to our east, right? So we today have FTAs or comprehensive economic partnership agreements with every RCEP member except China. After Australia and New Zealand have been concluded. With Australia, we are already now working on an enhanced comprehensive economic partnership agreement after the FTA, already into it. So, one, we do need to revisit and renegotiate in light of our experience and current requirements and future imperatives our FTAs or CEPA, SICA with ASEAN, Singapore, Japan, Korea. And so that is our first order of business because it really does take care of almost the entire RCP region except China. The second observation I'd like to make here is that there is a calibrated opening of economic engagement with China taking place at this point of time. And we need to be on a surer footing with regard to China's policies, our geopolitical relationship, in order to see how this moves forward. But it is important for us to establish a modus vivendi with China because China has a dominant role in the global supply chain. And, if you look at various studies, I found that, if 2,000 products are basically considered to be of what you might call critical bottleneck products in global value chains. And, Japan, Korea, China, Taiwan account for today nearly two-thirds of those critical bottleneck products. And so, therefore, we have to focus a lot more on our eastern side in order for us to also be able to take advantage of the FTAs that we have signed with the Western countries, for us to be able to become a manufacturing power and an exporter on scale, at real big scale. So I think Japan and Korea are high priorities. Australia and New Zealand, as I've said, we are going to upgrade them further. We have started negotiations with ASEAN, and I think that in a way, without getting into RCEP, we'll have to see how we can continue to, in a calibrated manner, open up to economic engagement with China. I mean, there is, I think, a case for it, certainly, even as we have the broader context of geopolitics and our bilateral political and security challenges.
Thank you, Ambassador Jawed Ashraf. That was a great conversation.
Thank you. Always a pleasure, Ravi. Thank you very much.
And that's a wrap for Asian Insider. I'm Ravi Velloor. Don't forget to share this podcast with your friends and family. And if you'd like to read my articles, we have links in our podcast show notes below. You can also sign up for our Asian Insider newsletter. Thank you very much for joining us today.